How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you deferred annuities, the different types of deferred annuities, why somebody may want to get involved with a deferred annuity, and kind of the pros and cons of each. Deferred annuities are income for later. It's not immediate income. So what happens is individuals typically go into deferred annuities if they understand, okay, I'm not going to be retiring right now, but maybe in 15 years, 10 years, 5 years, however many years out there, and they want some sort of guaranteed retirement income at a later date and time. So what happens is essentially the money that you place within a deferred annuity is going to have certain gains that will grow deferred, and meaning that think about it like a bucket of money, and any time that bucket of money, depending upon what it's tied to, whether that's a fixed rate, whether that's an index type rate, whatever that is, will grow anytime that you receive gains. When it comes time for that certain date and time that you want to retire, then you have certain options to have unlimited streams of income, and it's contractually guaranteed by the terms of the contract through the insurance company that you choose. So understand that anytime you see a deferred annuity, it's not an immediate annuity. With an immediate annuity, someone places their money in an immediate annuity, understanding that, okay, I want to retire exactly in 30 days, and this is the lump sum that I want to give the insurance company. What's the most amount of income the insurance company could give me? It's completely different. You're just trying to place money within the annuity realm, within some of the very favorable contractual guarantees out there, but understanding, okay, it's going to take some time for my money to grow and to really act favorable for me. So there's a couple of really cool types of annuities out there, and as you see pulled up on my screen, I want to show you the difference between utilizing a deferred annuity or just a traditional IRA that's involved with mutual funds. So as I said over here, money in account will grow dependent upon what the account value is tied to. So with a fixed annuity, it's tied to a fixed set of interest rates. It's like a treasury bond or like a bank CD. You have a set amount, a set rate during that length of contract. So if you have a 5-year fixed annuity, and let's say it's paying you 2%, then every year for the next 5 years, 2% is going to be added into your bucket of money, into that initial starting value. Now, somebody might want to go into a fixed annuity over traditional IRA with mutual funds, is because mutual funds have a lot of fees involved with them. You have mutual fund related fees, you have advisor fees if an advisor is managing that account. You also have something known as downward market loss that could really hinder your retirement accounts, just like in 2008. The average portfolio lost 57%. So if you had a traditional IRA versus a fixed annuity, the fixed annuity, they used to be very attractive in the 80s to 90s. Not so much anymore, because why? Interest rates have hit rock bottom. So just kind of understand, fixed annuity, it's just a fixed interest rate. There's nothing sexy, nothing attractive about that, but it still gives you more favorable rates of return than a typical treasury bond that's currently paying less than 1% right now. Now the next form of deferred annuity is variable annuity, and whenever I compare a variable annuity versus IRA mutual funds, I tend to lean more towards an IRA mutual funds. If you're setting it up through a wealth accumulation specialist, I don't like variable annuities because I believe that they have a lot of hidden fees, is what I've just personally seen with a lot of individuals that have called my office that have variable annuities. And after we find out what the hidden fees are, we play the game. Let's give the company a call, and I'm able to ask a whole slew of questions to really open up the client's mind to understanding variable annuities. It's tied to mutual funds. If an IRA is tied to mutual funds, typically the IRA has less in fees and a higher potential for you to have gains within there. The variable annuity, because of the fees, and you have the potential downward market loss with them, that's why I would recommend that you go within IRA mutual funds. But that's just speaking in very general terms. Obviously, it's a case-by-case situation. There are some good variable annuities out there, but just the ones that I've dealt with on a personal basis is the reason why I do not like them. Then you have the index annuity. Okay, this is a great deferred annuity. They came out in the early 90s. They used to have very low cap rates. What an index annuity is it's kind of like a fixed annuity, but rather than paying you a fixed rate of return year by year, the company will pay you an amount that correlates to upward market movements. So if you have a stock market index, let's say you're tied to an S&P 500, and the S&P 500 gained 10% that one year, but your cap rate is, let's say, 8% for that given year, then you will be capped. You will only see an 8% gain into your account. But if the S&P the next year loses 20%, you have a floor of 0%. So you're either going to be gaining up to the cap or not gaining anything. So you understand your principal is not at risk. With the variable annuity, your principal is at risk. So just kind of understand that. So index annuities used to have very low cap rates where they weren't that attractive. But then in 2008, there was a combination type annuity that involves the index annuity with a sort of lifetime income that you can never outlive with income riders, and that's known as the hybrid annuity. Hybrid annuity, that is my favorite product of them all, because your actual account value, if you know that you're 15 years out, 10 years, 5 years out from retirement, you could essentially take money, roll it over from your IRA, your cash accounts, 401k. You could roll it over into a hybrid annuity or an index annuity, and have your account value either gain with upward market movements, flatline whenever the market does not, goes down or does not do anything. So your principal, your account value is staying preserved, and you're only receiving that compound interest on that account. And then when you're ready to turn on your income, let's say you're age 62 and you want to turn on age 67 or 65, whatever that is, you have a secondary contractual guarantee over there known as the income rider, which it gives very, very favorable rates of return. Could be upwards of 7% compound interest, and there's a calculation that is determined with how you could actually receive lifetime income without ever losing control of your money. So there's some really fascinating things with these deferred annuities, but just understand that you're deferring your money, you're deferring turning on an income for a later date and time, and there's some really great contracts out there. You have hundreds of different contracts per type of annuity. So there's hundreds of different contracts for the fixed annuity, hundreds of different contracts for the hybrid, for the index. So just kind of understand that you should not have a one-size-fits-all type mindset, and you need to become educated and find out what your options are. If you understand what your goals are, one of the things I recommend, give our 1-800 number a call. We implemented 24/7 customer service where you give us a call, we'll educate you, we'll send you different information. If you're interested in an annuity, we have certain softwares where certain proprietary relationships where we get you much higher contractual agreements than other types of advisors out there by just understanding these contracts and understanding how these contracts work, and really knowing how to position you in a very favorable way. So once again, my name is Derek Afasi. I'm this cool looking cartoon guy right over there, and please give us a call. I really hope that you found some value in this video, and be on the lookout for some of my other videos. Thanks, guys.